Hey everyone, welcome back to Corporate Decoder, the place where we spill the tea on all things business and finance. And today we're diving into an amendment to an earlier report from Houston American Energy Corp, or AGIG, as some of you might know them. This isn't just any old update, it's like finding out you forgot a crucial ingredient for your secret recipe, and you're rushing back to the store to grab it. So what's the big deal about this Form 8K charge? Well, it's an amendment to a previous filing, meaning they're correcting or adding information to something they already told everyone. Think of it as a corrected yearbook photo or a revised class schedule. Specifically, this filing is about adding financial statements and pro forma financial information. Remember that deal back in July where Houston American Energy acquired Abundia Global Impact Group, or AGIG? Well, this is where they're finally delivering the detailed financial picture of that acquisition. They had promised to file these financial statements by a certain date, and this amendment is them fulfilling that promise. Let's break down that acquisition. Houston American Energy essentially swapped its own company stock for all the ownership units of AGIG. AGIG is described as a Delaware limited liability company, and in this deal, AGIG issued a whopping 31,778,032 shares of its common stock to the AG owners. That's a significant amount of new stock which can really change the company's financial landscape. Now, about AGIG itself, the filing doesn't give us a ton of detail on what AGI does, but the fact that Houston American Energy is bringing them into the fold with such a large stock issuance suggests AG as seen as a substantial asset or a major growth opportunity for AGUSA. You don't give away millions of shares for nothing. Okay, so here's where we get to the juicy financial bits, the actual numbers behind this deal. This amendment includes audited financial statements for AGIG for the years 2024 and 2023. Audited means an independent accounting firm like Baker Tilly US LLP, who also provided their official consent, as you can see in the exhibits, has looked at these numbers and given them a thumbs up. They're considered reliable. Having audited financials from the previous 2 years gives us a solid baseline to understand AGIG performance before it became part of Houston American Energy. On top of the annual reports, they've also included unaudited financials for the first 3 months of 2025 and 2024. Unaudited means the numbers are presented as is without that independent verification. It's still useful, especially for spotting recent trends, but it's not as ironclad as the audited figures. Seeing these short-term numbers helps us understand how AG was performing right up to the point of acquisition. Perhaps the most important piece of this puzzle for us is the unaudited pro forma financial information. This is where they try to paint a picture of what the combined company, Houston American Energy plus AGIG, looks like financially. It's like a what-if scenario showing how the acquisition impacts the big picture numbers. These pro forma statements are crucial for investors to understand the immediate financial consequences of this merger. They're not audited yet, which is why they're called unaudited, but they should give us a clear indicator of financial health post-acquisition. Now, let's dig into what these financial statements might tell us. While this specific filing doesn't contain the detailed tables within the text itself, we can infer the importance of what's being filed as exhibits. For AGIG, audited figures for 2023 and 2024 would show us things like their revenue, how much money they brought in, their cost of goods sold, how much it cost them to make what they sell, their operating income, and ultimately their net income or profit. We'd be looking for growth trends, profitability, and any red flags like escalating costs or declining revenues. The Q1 2025 and 2024 numbers for AGIG would highlight any seasonality or immediate shifts in performance. Were they heading into the acquisition on a high note, experiencing rapid growth, or were things perhaps slowing down? These short-term figures can often be more volatile, but they give us a snapshot of recent activity. The pro forma financials are really the chef's kiss here though. They combine the historical data of both companies and adjust it to reflect the acquisition as if it happened at the beginning of the reporting period. This allows us to see the combined entity's revenue, expenses and profits, giving us a clearer view of the new company's financial standing. We're talking about things like combined revenue, combined operating costs, and the projected net income. If the pro forma shows a significant increase in revenue, for example, it suggests the acquisition of AGIG is expected to boost Houston American Energy's top line. Conversely, if costs also rise dramatically, it could indicate integration challenges or that AGIG was a costly acquisition. The key is to see if the expected benefits of buying AGIG are showing up in the projected financials. For instance, if AGIG had strong revenue growth in 2024, let's say a 20% increase, that's like saying they managed to attract 1 in 5 new customers compared to the year before. If their profit margins were also healthy, that means they were not only growing but doing so profitably. We'd want to see if this trend was maintained into early 2025 and then how that looks when added to Houston American Energy's own numbers. When we look at the pro forma statements, we're essentially asking, is this acquisition making USA a stronger, healthier company on paper? Are the combined revenues significantly higher than Achimaster Etch was on its own? And importantly, are the combined profits growing at a similar or even faster pace? This Warren Buffett style approach is about looking for value creation. Is USA buying AGIG because it genuinely enhances the company's earning power and long-term prospects? Or is it just expanding the size without a commensurate increase in profitability? It's also important to look at how the debt situation might change. Acquisitions often involve taking on debt or issuing more stock, which can dilute the value for existing shareholders. The pro forma statement should give us a glimpse into the combined company's debt levels and its ability to service that debt. The inclusion of the consent from Baker Tilly US LP is a good sign. It means they've signed off on their role as auditors for AGIG. And by extension, they're part of the process that's bringing these audited financials to light, which is essential for transparency. Houston American Energy Corp itself has its common stock trading on the NYSE American. This means it's a publicly traded company subject to all the reporting requirements of the SEC, which is why we're looking at this filing in the first place. The value of this stock is what investors are betting on, and these kinds of acquisitions are key events that can move that value. So what's the story here? We have Houston American Energy making a significant move by acquiring AGIG. This filing is a crucial step in disclosing the financial details of that acquisition. It's about bridging the gap between the initial announcement and the complete financial picture. Investors need to make informed decisions. AGIG is essentially saying, look, we bought AGIG, and here are the financial statements that show you what we bought and how it's expected to impact our combined financials. Now for my take on all of this. Houston American Energy is actively trying to grow, and this acquisition of AGIG is a clear indicator of that strategy. They are using their stock as currency to acquire what they believe are valuable assets or businesses. The strength of this move really hinges on the quality of AGIG financials, should reflect that and be a positive sign for ATUSA's future. However, a key risk is always the integration process itself. Merging two companies can be incredibly complex, leading to unforeseen costs and operational disruptions. We don't see the specific numbers here, but the fact that they had to amend their initial filing suggests there might have been a slight hiccup in getting these financials ready on the initial timeline. This isn't necessarily a major red flag, but it's something keen observers will note. The real test will be in future filings. Do the integrated financials of Houston American Energy continue to show the positive trends that AGIG contributed, and does the combined entity demonstrate solid profitability and growth that justifies the significant issuance of new shares? The company direction seems to be consolidation and expansion through acquisition, a strategy that can be very rewarding if executed well. The opportunity is clear. AGIG could be a significant revenue driver and a catalyst for growth. The weakness, or rather the risk, is that acquisitions are inherently uncertain, and the success of this one will only be proven over time. Right now, the story is one of growth through acquisition, and the filing is about delivering on the required transparency for that transaction. It's a crucial piece of the puzzle for understanding the new financial landscape of Houston American Energy Corp. Alright, that's our breakdown of Houston American Energy's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.